Welcome back to the Keiser Report. I'm Max Keiser. Time now to go to the Isle of Man and speak with Simon Dixon of BnkToTheFuture. Simon Dixon, welcome back.
Hey Max, thanks for having me.
All righty, let's get into some heavy-duty crypto action here. The SEC official, they shocked the global crypto community when he declared that Ether is not, in fact, a security. What argument did the SEC make to support this? And do you agree, Simon? So this kind of falls into your wheelhouse over there at BnkToTheFuture, what you guys do. So how was this interpreted, Simon?
So what the SEC came out and stated is that Bitcoin and Ethereum are not securities because they're sufficiently decentralized. And therefore, what it proved is that you can sell something as a security because there's no doubt. They didn't comment, but they did leave out the information stating that Ether, when it originally started, probably was a security because it didn't exist and it was something they were selling to people and people were purchasing it with the expectation of a return, and therefore it meets the definition of a security. But over time, they've stated that it's become sufficiently decentralized whereby something can start as a security and morph into a non-security. Now, this is very interesting for the crypto market because it's the assumption of how ICOs are sold now. So initial coin offerings are where you offer the world to purchase your token in exchange for a cryptocurrency to launch some kind of network or decentralized token or something else. But by stating that Ether is not a security, it's essentially allowed for the innovation to grow in this market and for these things to be sold in compliance with securities laws, but later can still trade on crypto markets where if they merge into not being a security, like what happened with Ether.
It's been a question for quite some time now. What exactly is Bitcoin? What are cryptocurrencies? Are they securities? Are they currencies? Are they bonds? Are they commodities? So apparently the SEC is saying that it's some kind of a morphing, shape-shifting quasi-entity that can, like a chameleon, go from being not a security upon when it's offered, and then it becomes a security later. So, but as you point out, Simon, it seems as though the regulator in this case is kind of tipping their hat to innovation, that they're saying that we don't want to clamp down on this space too hard. We want to give it some room to grow. Is that your perception?
Well, yeah. I mean, you've got to remember that the whole world wants to take crypto and blockchain, Bitcoin is where all the jobs are, where all the growth is. Bankers are realizing that they don't want to work for banks anymore. They want to be involved in a crypto, blockchain, Bitcoin startup, whatever that perception is. All countries all around the world are experiencing double-digit growth in terms of employment. All the money's going in, all the investments going in here. The whole world wants to see the disruption of traditional banking and finance, and nobody wants to be a part of the legacy system. So the SEC realized that if they don't embrace this sector, then there's every country in the world that wants to disrupt Wall Street, that wants to disrupt Silicon Valley, and they will take all the jobs, all the innovation, and the complete reinvention of the financial markets. So the SEC really has no choice. If they want to protect Silicon Valley, Wall Street, and all the entrenched interests, they have to embrace this sector, which is really what came from this whole Bitcoin experiment, that Bitcoin is now disrupting central banking, and Ethereum has come along and now started to disrupt Wall Street with IPOs. And now people are deciding that the worst place in the world to be is Silicon Valley because you can go offshore and you can raise significantly more money than you can raise in Silicon Valley. And now, with Ethereum, Ether not being a security, it's opening up complete global markets. And that's a real problem for Wall Street. And so the SEC needs to make sure that they are, embracing that before everything goes outside of America.
So walk me through what is happening. Let's call it jurisdiction shopping. So this industry, this crypto industry, is highly mobile. It can move wherever the jurisdiction is friendliest. And there have been a number of places that have said, hey, we want to be the Switzerland of crypto. And as a matter of fact, Switzerland has said they want to be the Switzerland of crypto. Isle of Man, where you are now, has made kind of gestures in that direction. Hong Kong was in the running. Singapore's in the running. Can you give me a bird's eye view of where the best jurisdictions are currently for crypto and how you see that, because it is pretty dynamic and it changes every few months, Simon.
Yeah, I mean, it's constantly changing, and governments are making their decisions of where to go, and everyone has to make a decision, and every country will have to make a decision. And I believe that crypto is going to shape their political future and campaigns, and who gets them, elected in the future, as we can see, based upon their crypto policies. So you got one approach, which is do what China did. China said that we're going to make exchanges and we're going to get rid of them all, and we're going to make we're going to get rid of all the exchanges. Now, the problem is that there's all people in China that are doing mining. And when you're mining a cryptocurrency, essentially what you're doing is you're taking your Chinese yuan, you're investing it in machinery, and that machinery produces Bitcoin or other cryptocurrencies. And once it's produced into Bitcoin and other cryptocurrencies, it can go anywhere in the world and it can be traded for anything. And so really what China did is they allowed the industry that actually was the thing that was disrupting some of their capital controls. And then they shut down the exchanges. And when they shut down the exchanges, what they did is they gave all the data, all the money laundering data, all the ID verification, all the policies away from China so that they couldn't control that data, and gave it essentially to Japan and Korea, because Japan is embracing the industry. And what Japan said is, if all the jobs are here, if all the growth is here, then we better get control of the industry, put together some regulatory structure, and actually then we can tax it, then we can control the data, we can regulate the exchanges, we can find out what people are doing with the money, because all the problems happen in this intersection between traditional fiat money and crypto. And so you've got those two extreme examples. China realized all the innovation and all the data went to Japan. Japan's become the center of the Asian markets for crypto. And then everyone's looking at those and saying, well, what are we going to do? Well, the SEC, America's starting to realize, we are not as important in the world as we used to be. We need to get on top of this before we lose our Wall Street, Silicon Valley, and the importance of the US dollar. Then all the other little jurisdictions, Malta, Isle of Man, Switzerland, as you stated, are all coming along and saying, well, this is our opportunity. If this is a global market, all we need to do is create a friendly environment to support these businesses. We can get all the growth, all the jobs, all the business, and everything that resolves around the disruption of the traditional financial markets. And then couple that with the fact that you got Bitcoin that is now giving people the ability to transact globally without the banking system. And then you've got stable coins, which have come along and saying, well, there's no longer a monopoly on the dollar. Bitfinex can create their own dollar. Isle of Man can create their own dollar, and they can just create a cryptocurrency backed by the dollar that then has to compete. And you can decide which jurisdiction is right for you based upon your policies, where you want to be in the world. And that is a truly dramatic, significant change in the importance of dollar, Wall Street, and Silicon Valley in the world.
Now, you mentioned Bitfinex there for a second, and stable coins, and they have what they call a tether, which is a stable coin. It's tied to the US dollar. The price remains tied to the US dollar. There's no volatility there. They were just in the news recently. A legal opinion came out. There were some questions about tether because the industry is moving so fast. It's kind of ahead of the accounting industry. The accounting industry has certain statutes that they have to comply with, but as we were saying with the regulators, they had no idea whether this was a fish, a fowl. They had how to regulate it. They finally have coming up with some solutions. The accounting industry is even further behind the curve than the regulators. But Tether is an example. What's your view with Tether? I think this is kind of a hot button issue out there. The question of they're backing the dollars, et cetera. Do you have an opinion on that?
Well, I should disclose I am a shareholder in Bitfinex, and the same team that managed Bitfinex managed Tether, so I can't speak impartially around that subject. But getting to the question, the point is that now private companies, governments, competing governments can now actually create their own innovation, and now whether the innovation is like Tether, where you have, the dollars in a Taiwanese bank, and then the US and the Federal Reserve try and get in the way of that system and cause problems because they recognize this. And then you have interjurisdictional issues and clearing issues and all that type of stuff. The friction is always in the fiat money and the cryptocurrency money. What Tether actually does is it produces a valuable service whereby money can flow in fiat without volatility from exchange to exchange, from jurisdiction to jurisdiction. The challenge is it's using the legacy traditional financial system, and therefore you need to rely on trust, audits, accounting, and the trust of the counterparty. And so, that has its own complications. And so it's not really a crypto problem, it's actually a fiat problem. And that is highlighting why people over time, while people do need everyone needs the ability to have less volatility in when they're paying their rent or buying houses. And that's where these stable coins come in. And if you don't like the way Bitfinex are doing it, then another startup will come up with another model, or another country will come up with another credit risk model, and they can all compete, and people can choose what type of dollar they want in the future, how they want to transact. And then ultimately what it does is it drives the value proposition of Bitcoin, which allows you to own your own money, spend your own money, and have a monetary policy based upon savings rather than debt.
Take a look at the exchanges. Since Mt. Gox blew up in 2014, there's been a lot of improvement, correct?
Yeah, so the exchanges are always going to be the choke points. They're the easiest place for governments to target. And so there's a lot of innovation that's happening around there. Firstly, I believe that there's going to be 3 different types of exchanges in the future, and all of those exist right now. You're going to have exchanges which fully comply with local jurisdiction and local regulations, and the governments will get all the data, and people that want to use those exchanges will use those. You'll also have ones that are set up in privacy-centric jurisdictions that allow for people to flow money through those in line with their local laws, and therefore create a bit of a less seamless environment, or whatever that might be. And then you've got the decentralized exchanges. At the moment, those are not usable, they're not friendly, but they're getting better and better and better. And as the protocol technology, like Lightning Network and things like that, are getting better, you're going to see so much innovation. Look, my full-time job at BnkToTheFuture is to stay up to date with this industry, and I cannot keep up with what's happening.
All right, hold it right there. We're going to say goodbye, but hopefully you can stay around for a second segment if you can. But we'll say adios for this edition of the Keiser Report with me, Max Keiser, and Stacey Herbert. I'd like to thank our guest, Simon Dixon of BnkToTheFuture. You can catch us on Twitter at Keiser Report. Until next time, bye, y'all.